Hi guys, I'm Rhyce from the askrhyce show, and this week I'm joined by Charlie Aston. How you going, Charlie?
How you going, Rhyce?
No worries.
Good to see you again.
Yeah, likewise. Thanks heaps for sitting down and agreeing to have a chat with me.
Yeah, no worries.
So first of all, Charlie, tell us a bit about yourself.
So I'm a career banker. I've 37 years in banking now.
Yep.
Joined pretty much out of school.
Okay.
I had 21 years at the Commonwealth Bank.
Yep.
And in 2004 we started this franchise of the Bank of Queensland.
Yeah, right. Okay.
So yeah, been doing it a long time.
Yeah,
It's my life.
yeah, a long time. Yeah, that's it, just a lifetime.
Yeah.
And what's so obviously you've been in banking across the board. What's for you, Bank of Queensland? Like, what's the difference? Like, what's the?
Yeah, it's a good point. I mean, this is a franchise business, so that's unique in banking. It's the only bank that does that.
Yep.
And that was the appeal to me to join Bank of Queensland. Having been with a big bank, I think that the personal service of a smaller bank is better.
Yep.
And also the fact that you can control your own destiny. So, if we don't do business with people, if we don't get loans approved, we don't get paid. So there's an incentive there, and the benefit to the customer is that they're getting looked after.
Yep.
So I think that it's been successful and it's a good model. So that was attractive.
And from just quick briefly on the product side, so from a model point of view, compared to a normal bank, is there any limitations? Or I'm sure there's some advantages, obviously, but what's just a rough idea of sort of what's the difference?
Well, it should be pretty much the same. So, I mean, Bank of Queensland does have some corporate branches as well. Yep. You should be able to walk into one of the branches and not notice any difference in terms of the fit out and the setup and the way you're served and those sort of things. Our rules are the same. The policies that we follow are the same. The products are the same. I guess where there is a little bit of a difference would be where we have some discretion in terms of pricing, so can maybe get a little bit better interest rate and better fees. And also the ability for a local banker who knows the community and the industry to give support to people, to maybe to get some loans across the line that might not...
may or may not have.
Yeah, that's right. So there's an advantage there.
Yeah, look, I mean, I speak for myself. Obviously, I've known Charlie for a while, and being able to access Charlie has been great in terms of compared to some big banks. Not having anyone you can actually talk to. So
that's a good point.
Yeah, exactly. Yeah. So look, Charlie, we caught up maybe a month ago, a couple of weeks ago, and we were chatting about just property in general and what could be something to kind of get the property market moving. Lo and behold, we've just had an election. Scott Morrison came out last week, just before the election was run, to put up some election promises, and one of those was one of the things we'd nearly been talking about, is some sort of incentive for first home buyers. So I'm pretty excited about it as a real estate agent, as a lot of our industry are. But what's your take on it from banking?
Yeah, I think it's a fantastic incentive. After we had that meeting, Rhyce, and that policy came out, I think I said to you, do you know someone in the government? Because it was pretty much exactly what you suggested. Great idea. I think one of the areas of the market that has been struggling a little bit is the first home buyers. Yeah. We haven't done a lot of lending to the first home buyers, as we've talked about. Yeah,
that's what we chatted about,
And pretty much it's because of the price. I mean, time they buy land and then they have to build, you're probably in the mid-400s, I think, typically in the Toowoomba market, which is out of the reach a little bit for a lot of first home buyers, whereas that 300 to 400 is probably more gettable, if we put it that way. So, this being available to first home buyers to get them into that market without having to build, I think, and there's a knock-on effect of that. So that gets those buyers in, and then the people that own those properties in that range can then upgrade to a sort of the 400 to 500, and so it goes. And so the whole industry benefits from that. And without the government having to actually give any money away. I think that's a good thing. So it is a really good idea, and hopefully it'll get a few more people into the market.
Yeah, definitely. And I mean, because what Charlie and I chatted about last time is that unless you, with that mid 400s price bracket where we are in Toowoomba, for a new property, that was the only government incentives were for new property. So for anyone watching this down the track, obviously you could go for units, but which is at a cheaper price point, but not everyone wants a unit. So I think that it's fantastic. It gives first home buyers it's going to give them more choice in terms of what sort of property they can look at and help them out without having to have the heavy cost of mortgage insurance or spending a lot longer saving money to avoid that mortgage insurance. So.
Yeah, exactly. Yeah, so to maybe explain to everyone a little bit about exactly how that works and what the benefit of it is.
Yeah.
We'll talk about that a little bit.
Yeah, definitely.
I think the thing for people to know is that the banks typically want a 20% deposit. That's to minimise the risk to us and that people have got equity in there. So what this does is lets people get in for as little as 5% deposit. When you normally go to the bank and make a loan application and you've only got 5% deposit, you'll have to pay something that's called mortgage insurance.
Yep.
Now, that insurance doesn't cover you as a borrower. It actually covers the bank to cover that risk.
Yep.
Now, that fee will vary. It's a one-off upfront fee. It'll vary depending on what the loan-to-valuation ratio is, how much they're borrowing, and a couple of other factors. But typically, that might be $10,000-$15,000 or something. It's a pretty big whack, and that gets added onto on the loan. So then you pay interest on top of that as well. What this incentive that the government's going to be offering from January next year will be, they will cover that gap between the 5% deposit and the 20% deposit without the need to pay the mortgage insurance. So pretty significant saving for people there and a pretty good incentive for people.
Yeah, definitely. So essentially they're underwriting the risk of that 15%. So if something were to happen to that person who's borrowing, my understanding is that they would, if needed, they'd cover the shortfall for the lender.
The government's actually guaranteeing
exactly
that amount, and we're not having to go to the mortgage insurer and pay that premium. So great idea. I reckon
it's fantastic. So anyway, guys, hope that gives you a bit more insight into I think some exciting changes, and I think it will drive our market as we were just talking about there.
Yeah, absolutely.
So look, probably the next thing for me is on that topic, like just to continue on from that a little bit, Charlie, what would be your best advice? I mean, knowing that that's coming up, if you were talking to a first home buyer today or someone who's considering buying property, it could be young, old, they just haven't purchased before. What from a banking perspective, getting your deposit ready, documentate, like what's your best advice that you'd give someone in that position?
I think obviously getting the deposit, so minimum 5% is your starting point. More deposit is better. Because obviously you've got to borrow less, less interest, and you've got a bit more comfort in the property there, having that equity. So I think save as much as you can. Also, you're able to demonstrate to a lender your ability to be able to put money away and therefore meet a loan repayment. So from my perspective, when I'm assessing an application, the more someone has consistently shown that they can put money in the bank, the better. So that's really important. The other thing is to make sure it's obviously affordable, the loan repayment. So, I mean, yourself what your budget gets to in terms of how much you got coming in and how much you're going out. I think budgeting is really important. It's something that a lot of people don't do. You tend to, the money goes in the bank and
they spend it.
Yeah, that's right. You got your fixed commitments and whatever's left over you spend. I think it's important to do a budget and to work out exactly what your expenses are, because the lender's going to want to know that. What are your regular expenses? Your food, your fuel, your insurances, and all those general costs, your medical bills. Know what that is, and then know what your income is and what's left over at the end of it, and that gives you a pretty good feel for how much you can afford in terms of a repayment. And then certainly go to a lender. I'm happy to take calls from people and just do a quick assessment. We've got a tool that we can put that information into and fairly quickly come back and say, well, your borrowing capacity based on your income expenses is X amount. So
Yep.
if you get a loan for that amount plus your deposit, then that gives you a figure as to how much you can spend on a property from there.
Yeah, fantastic.
Yep. Yeah.
No worries.
Helps.
That's good. I think the budgeting thing is really good. I mean, that old saying of like live within your means, I think is really important. And I think especially if you're looking for a property, you might make some sacrifices in the short term, but it might mean that you end up buying a property. And with what we're seeing going on locally, I think property prices for us, we're really well positioned. There's a lot going on that I think will drive our market.
Yep, absolutely.
And I think in the future, people, anybody who's buying in today, in 20 years' time, looking back, if you were able to buy more property, you probably would have. So
no, that's right. There's a lot of infrastructure happening in Toowoomba, a lot of positives and growth predicted, which that flows on to people who've got to live somewhere, and therefore when there's demand outstrips supply, you get increase in property values, in growth.
Exactly.
So if you're able to get into the market now where the opportunities are there, the median house price is pretty affordable in Toowoomba comparatively to Brisbane, and who knows, it might not be long before you got things like fast trains going to Brisbane, which opens up another opportunity, and so it's probably a good time for people to be looking to get into it.
The future's bright.
Yeah, absolutely. Yeah.
I think so.
Yeah, I agree.
On the so obviously we're talking about first home buyers there. For a while now, from a real estate perspective, we've seen probably investors really contract, and that we just haven't seen a lot of investors in the market.
Yeah, we have too.
Yeah, and look, I think a lot of that's off the back of obviously Royal Commission. So here in Australia, we had Royal Commission in terms of lending and finance, and just what I guess a move to responsible lending. That's how I would phrase it.
Yep.
And I think sometimes I come across investors who think that, look, there's just I'm not able to, or people who once upon a time may have wanted to invest in property. Think that they wouldn't be able to. Like, what's around for investors these days, sort of post Royal Commission, I guess? Yeah,
it's a good point. And look, certainly there has been some changes within the industry, but I got to say, I haven't noticed anything, and there's certainly been no directive from Bank of Queensland head office in terms of making it harder to borrow money.
Okay.
I haven't seen that. We're able to get loans approved. From an investor's perspective, there was also a couple of things that came out from APRA in terms of who's our regulator, and they wanted a contraction in interest-only lending. They wanted to put interest rates up on investment lending, which did make it a bit harder for an investor who was wanting to get a rental property, and they sort of looked at the returns and thought, maybe it is a bit hard, maybe there's not the cash flow is not quite as good as what it would have been. That's changed in terms of the restrictions on interest-only lending have virtually been lifted. We're certainly open for business there. There's a very small difference in the interest rate now. It's probably 0.1 to 0.2% more.
Pay a slight premium,
a little bit more
to use the service.
But it's not a lot. And the policies around being able to do it are not restrictive. So the opportunities are there. And then when you look at the return that you get on investment property, which typically, you probably know better than me, but I think maybe 5% or something like that is average. You put the money in the bank with me, you're only going to get 2%. So
it's a bit,
I'll probably put myself out of a job. But on the other side of it, if we can lend money for people to buy properties, they've got to be better off. You borrow money at 4% or less, you get a 5% return on your investment, as opposed to just parking it at the bank at 2%.
Exactly.
Doesn't really make sense.
No. And look, I guess that's probably, Charlie hits on a good point there. I think that's the trade-off at the moment. I think money is affordable. Our official cash rate is still at record lows, and we were chatting about, possibly we could see that go lower. So I mean, that's the trade-off that I guess parking money in the bank is not going to get you the returns that it might have done 10 years ago or longer. So okay. So look, there are options for investors. That's fantastic.
We're certainly open for business and looking to lend money. Sure.
No worries. No, that's fine. And look, I guess in closing, Charlie, like from your perspective, from a banking side of things, like what what do you see for the future? Do you have any sort of predictions, or what do you think's on the horizon?
Well, yeah, as we spoke about, positive for Toowoomba.
Yep.
Residential property is always going to be, something that Australians love. That's not going to change, I don't think. The banking environment post the Royal Commission, there's going to be controls there to make sure that people don't overextend themselves. But I think, as you said, it's just responsible lending. So, the world continues, right? It goes on, and people are going to keep wanting to do things, and people want to get ahead in life. And the opportunities are going to be there. There's nothing out there that would suggest to me that in the future it's going to be a whole lot harder within lending or property investing going forward. So I think it's quite positive. I think now that elections behind us, there's a lot of people who are probably sitting on the fence that were a little bit concerned about some of the proposed changes. They're not going to happen now, and I think people will move forward and go, well, let's get on with life.
Look, I think when it comes to election time, I think whenever there's an election, people are, I guess, tentative, which is understandably, about what could change. I mean, now it's been run and done. I think moving forward, we've sort of got hopefully we've got stable government for a period of time, and people can just carry on and get back on with it. So. All right, guys. Well, look, really hope that was helpful. Thank you very much to Charlie.
My pleasure. Thank you. Good on you, Rhyce.
Pleasure. Look, guys, if you have any questions whatsoever, feel free to post them in the comments below. Also put a link there for where you can get in touch with Charlie if you've got any questions for Charlie. And thanks for tuning in.
Cheers.
See ya.
Thanks.